Hi, welcome to this episode of Manager Mix. I'm Laura Dew, editor of Money Management, and I'm here today with Nick Paul from MFS Investment Management, where he works as an institutional portfolio manager for global small and mid-cap equities. Welcome, Nick.
Thank you. Nice to be here.
Yeah, you've come from Boston today.
I have. A long way to be here, but it's a pleasure to be here.
Well, thank you for coming. So, Nick, do you want to tell me a bit about yourself and your role at MFS?
Yeah, so I work as an institutional portfolio manager on our global small and mid cap strategy, myself along with a team of four portfolio managers. We're collectively at MFS across ourselves and other dedicated small and mid cap strategies as a firm. We manage close to 60 billion US dollars in dedicated small and mid cap strategies.
And what are SMIDs? How would you best describe small and mid-cap equities? What does that cover?
Yeah, that's a great question. Small and mid cap can mean a lot of different things to a lot of different people, and depending on where you are in the world, I think the definition of small and mid cap can vary. So, if you look at our portfolio, we benchmark ourselves to the MSCI All Country World Small and Mid Cap Index, where the upper range of market cap in U.S. dollars today is right around 30 billion. So in Australia, it might sound a little bit larger in terms of small and mid caps than you might be used to. I was looking at the Australian market, and on average, I think in that benchmark, Australian names average about 3 billion. So as we think about the universe, our sweet spot for new ideas within the portfolio are typically around 1 billion to 10 billion in market cap in US dollars. Once names start to graduate towards the upper end of that range, closer to that 30 billion, we're going to start to move those names out of the portfolio because we want to be a pure small and mid manager within the space.
Yeah. Okay. That's good that you sort of narrowed it down to that niche, isn't it?
Yeah.
Yeah. And why is active management so important in this asset class compared to in the large cap space?
Yeah, another really good question. It really comes down to inefficiencies and the sheer number of opportunities within our universe. So again, if you look at our benchmark has close to 8,000 names within the index. In fact, the top name at the end of March in our benchmark was only about 30 basis points. So as an active manager, not only are these names very much uncovered, on top of the fact that there's close to 8,000 names, we believe that in the space you could still be very active and run a well-diversified portfolio. So for example, if you look at our strategy today, we run close to 100 names within the portfolio. We like the benefit of diversification, but as an active manager, our active share in the portfolio today is still in the high 90% range. So it's a very inefficient marketplace where if you have a view on a company, you can easily express that view. And again, many of these companies are just underfollowed or undercovered by sell-side research.
Okay. So on these global and small and mid-cap strategy that you have, what's the investment philosophy behind that?
Yeah, it's a great question. So what we're really looking for at the end of the day is to uncover unique opportunities in the asset class, really focusing on what we would consider quality businesses. So businesses that have pricing power, businesses that have barriers to entry, and importantly, businesses that are able to compound earnings and have a durable earnings stream over time. Now, with that said, I think what's most important is probably how we go about that, right? So how are we uncovering these opportunities? For us in the portfolio management team managing the global small and mid cap strategy, we're very fortunate at MFS where we have a global research platform. So our platform spans the globe. We have 9 investment offices across the globe. Today we have over 60 equity analysts that are set up across 8 global sector teams. And these analysts are truly experts within their particular sectors and industries. And it's really incumbent upon us, the portfolio management team, to tap into that deep expertise and to, again, uncover these opportunities. But the important part, again, is really that we have individuals in local markets. So as you're looking at small and mid-cap companies, which tend to be very local businesses in many cases, extremely important and extremely valuable for us to have individuals on the ground in those markets, providing us with very unique insights and opportunities.
And you've been at MFS for sort of 14 years or so now. What is it that you like about working at MFS, and what lessons have you learned over the time?
Yeah, it's a great question. It's a wonderful place to work. MFS. For those who don't know MFS, we just celebrated our 100-year anniversary. So we actually launched the first mutual fund in the United States back in 1924. We sort of joke at the firm that MFS stands for My Final Stop. So as an employee who's been there for 14 years, I'm probably actually a little bit on the younger side. There's many employees that have been there 20, 30, 40 years. So I think that's just testament to what a great culture that we've built at the company. And this is truly a great place to work.
Yeah. And where are you seeing opportunities in this asset class at the moment?
Well, it's back to just the inefficiencies and the sheer number of names in the universe. Opportunities you can find opportunities in a lot of different places. And as I think about the opportunity set, and what I mean by that is really trying to look out over the next 10 to 15 years, I think the opportunity is going to look much, much different than what drove markets over the prior 10 to 15 years, where the previous decade was really about mega cap technology companies, primarily in the U.S., benefiting from low inflation, low interest rates, as these tend to be longer duration assets, and spending on things like the digital revolution or the transformation to the cloud, and then on top of that, the pandemic. But as I think about the opportunity going forward, and just think about where capital and investment is likely to flow, you think about things like energy and the energy transition. You think about things like onshoring or nearshoring. Aerospace and defense infrastructure is another area where we're finding great opportunities within the portfolio today. So it's really across a variety of sectors and industries that we believe stand to benefit from long-term structural tailwinds as we look out over the next 10 to 15 years, which again, I think is going to look quite a bit different than what we witnessed over the last 10 years.
So great. Thanks, Nick. That's all been really interesting. Thanks for watching this episode of Manager Mix.